Hello traders, just going to have a look at the scalp, the London Stone Scalp setups. I've been meaning to make a video on an advanced way of trading it for quite a while now, and so I've finally got a couple of trades on the go and I've had a spare second to make this video, so let's get cracking on. What we're looking at here is a trade, or two trades, pound US dollar or cable and euro US dollar. We're looking at the 1 minute time frame. If I were to switch to the 15-minute time frames, you'll see that it's a bit cluttered, but you can kind of make out. Let me try and clear it up a little bit. Here is the min-max lines as per the London Stone Scalp indicator. The rules say that you enter when the 15-minute candle closes within the min-max lines outside the Bollinger Band and in the favour of the EMA. And obviously the euro-dollar trade here would have been working. If you'd have followed the bog standard rules, you'll be up a good 30 pips. With a initial 20 pip stop. So just by following the core rules on this euro dollar trade, you'd have been okay anyway. But if we look at cable, cable flew through the min-max lines and didn't give you guys an opportunity on the 15-minute chart to get an entry, because obviously we would have needed that to close in the min-max line so we can enter and then jump on board. So like anything in trading, what we teach you is just the pure core basics. There's a lot of ways of making it different. What we're looking at now is exactly the same thing. It's just updated. That's annoying. The pivots are just updated. What we were just looking at was the min-max lines down here. Let me see if I can just draw them on quickly, because it might just ruin this video otherwise. So the max line was kind of out there, and the min line was kind of down here. And then this max line was kind of up there, and the min-max line was down there. So what we was looking at was, on the 15-minute chart, price went blasting through, didn't give us a chance to get an entry. But if you zoom in on the 1 minute chart, you can still sometimes sneak a little entry in there. So the rules are 1 minute time frame, all of the rules have to be met, and you can see it's starting to fly now. All of the rules have to be met on the 15-minute time frame, but on the 1 minute time frame, the 1 minute bar needs to close between the min-max lines. It still needs to be above the EMA, it always will be anyway. But the 1 minute bar has to close outside the Bollinger Bands. And you can see on the cable trade, it did meet these advanced rules, and all of the rules were met on the 15-minute time frame, so we entered. The way I trade this is to have a 20 pip set stop loss, and that would have been down here somewhere. And like these trades, the way to manage these trades is not with a profit target, because it's a Ferrari strategy, but with the stop loss. And I'll do a little bit of that now, shall I? So this cable trade, right, stop loss was down here. We had an initial bit of a rally here, so I thought, right, rather than have a 20 pip stop, I'll make sure if anything does happen, I'll get my stop underneath this swing. So my stop loss, this stop loss, is now tucked underneath this swing high. It's kind of hard to see it, but you get the idea. Now we've had another little bit of a rally and then another more recent rally. So if the market were to turn, I just don't want to watch it erode all my wins. I'm currently up, what, 630 quid. So I don't want to sit and watch it go all the way down again and hit my stop. So we at least need to get to break even. So now our stop losses are nice and safe at break even. So if we happen to have any news come out that we weren't expecting, then we know we're not going to lose any money at least. And now we've just had a big push up. When these big moves happen, you normally see an instant reaction of panic where people start selling. And normally, if the rules follow the average kind of momentum, the sellers will take down about half of the big push candle until the buyers come in, form a nice swing and go up again. So we're currently up 20 pips on cable and 30 pips on euro dollar. So let's move the stop up on the euro dollar. So we've got a nice swing here now. Just flick between the bid and the ask so you know which one is the lower. Obviously it will always be the bid in this case, but just as an example. Normally I just eyeball it, but for now, as you're watching this recording, I'll do it with a ruler. Measure about 5 pips, have a look at the number, 43631, and then drag your stop loss up, 43631. So now we've locked in 170 quid, £10 a pip I think I did on this one, so 16 pips. So it's bugger all really, but it's more than you would if you hit your break even point. And the same on the cable chart. Had a little bit of a retracement now. The euro dollar now I'm forgetting about. My stop loss is there. I'm happy if I made 160 quid on this trade because as you're starting to realise now, these trades happen all the time. So the most important thing is not to lose money, and the second thing is try and make a little bit more money. Now cable is testing this previous swing low. This grey line here is one of the London Stone trading lines. I'll just go and show you that really quickly. Like you guys know, it's important to have a target now. So cable broke through the min-max lines here. It then went straight into the 8-8 line, which you know is a bit of strong resistance. So if it fails to get through this strong resistance, it's going to come down a little bit before it gets enough momentum to have another attempt. But now you can use two trades side by side. Euro dollar is still rallying. Euro dollar normally overpowers cable and drags cable with it, unless there's pound related news. So if the euro dollar breaks this swing high, I would expect price to remain above this strong resistance line, and it looks like it kind of is. So it's a target. So now that was an initial target. When I first entered this trade, I was more than prepared to exit the trade at the 8-8 line. It's only because I noticed the euro rallying that I decided to keep it going. But now, as you guys know, a target can become resistance. The London Stone lines unfortunately don't work on the 1 minute or 5 minute time frames, so you have to kind of improvise. So the 8-8 line has been resistance, now we're expecting it to be support. Just draw a horizontal line over it, and then switch to the 1 minute time frame, and you'll still be able to see your horizontal line, and you'll see that price rallied through. The sellers took over and they pushed it all the way down to test the strong resistance line. Buyers came in, sellers took over, and it came all the way down again to test this strong resistance line, and now it's going to carry on rallying. So we should be able to assess that this strong resistance line is now a good support line. It's been tested twice, so we should be able to then think, well, that's a good place to put our stop loss. So measure a few pips below the swing, 63509, move your stop loss up, 63509. So now cable is now locked in £100, £10 a pip. Once your account size gets to probably £500, £600, £700, you could be doing £10 a pip. That comes under a bit more advanced money management, and you'll be shown that by your mentor. But now euro dollar's locked in 167 quid, cable's locked in 100 quid. 10 pips and 16 pips, so 25 pips locked in, but now I don't really have to worry about it. So now carry on managing the trade. What we've got now is the next 4 hours min-max lines. So we know that this is going to be another target because it's going to slow down. Very rarely does it break straight through, so we know that there's going to be a bit of congestion around here somewhere. The same for euro dollar. And in fact, this grey line is where I drew my 15-minute London Stone lines. Let me just throw it back on again so you can see it. So the London Stone lines, look how funny that is. The London Stone lines marry up with the min lines because it's all based on the same sort of mathematical calculations. So now my new target for euro dollar is the 8-8 because I know it takes a bit of momentum to get through it. So draw a grey line where the 8-8 line is, zoom back into the M1, and then monitor it. You know when price gets up to this grey line, it's going to start slowing down. Just because it's going to start slowing down doesn't mean to say you should use a profit target. It just means to say once it gets up to here, start managing your stop loss a little bit more effectively. Start bringing it a little bit closer, and I'll do that now. So underneath this swing, a couple of pips, 43737. 43737. There we go. So now we're locked in 20 pips or 27 pips, 270 quid. So we know we can predict where price is going to start slowing down. So rather than just let it hit that point and then come down and hit our bog standard stop loss, manage the trade. You're still giving market all of the freedom that you can. If something happened and it went posh through there, you're still going to be able to captivate that because you're just managing the trade with your stop loss rather than your profit target. And now we can sit and watch it. I'll just turn the recording off and I'll come back in a second so it doesn't get too long.